Hey everyone, in this video I'm going to answer which is the better dividend stock to buy. Is it Domino's Pizza, is it Starbucks, or is it McDonald's? I'm going to compare these three dividend stocks on four metrics including dividend yield. So let's get right into it. So the highest dividend yields here is close with Starbucks and McDonald's offering a 2% dividend yield and Domino's offering the lowest 1.2% dividend yield, but all three of these stocks have the potential to increase their dividend payment over time. So this is a long-term dividend stock investment plan here. The next thing I wanted to compare these three dividend stocks on is annual revenue growth. And what we notice here is Starbucks and Domino's demonstrate the best revenue growth here, with McDonald's exploding in 2022, but that's not its long-term trajectory. You cannot expect McDonald's to grow revenue anything higher than the low to mid single digits, although its recent investments in the mobile app and delivery are certainly good news for the company because it can reach more customers now. But still, it's saturated the market so significantly that there are relatively fewer areas for McDonald's to grow. That's not so true for Domino's and Starbucks, which have both said that they see significant opportunity for expansion with the potential for thousands of new locations over the next several years. So with these two, you get growth from comparable store sales growth and store expansion. And speaking of comparable revenue growth, Starbucks is in position to capture the benefit from the reopening economy in China. China is Starbucks' second largest geographical location. So as that momentum increases in that region, Starbucks should get a tailwind as a result. The next thing I wanted to compare these three on is the operating profit margin over the trailing 12 months. And oh, what a difference this makes here. Look at the advantage McDonald's has over the others, with an excellent operating profit margin of 45.4% and expanding. What McDonald's lacks in revenue growth, it makes up for an extremely robust operating profit margin at 45%. The next best is Domino's at 17%. Finally, Starbucks at 14%. Although Starbucks has said its long run goal is to be around 18 to 25% in terms of operating profit margin. Again, McDonald's outperformance in this metric is astounding and impressive. Finally, I wanted to compare these three on valuation, and they're similarly valued, with Domino's trading at a forward price to earnings of 26, with Starbucks at a forward PE of 24.6, and McDonald's coming in last at 24.3, or the cheapest at 24.3. Although if I had to pick one of these three excellent dividend stocks to buy, I would pick Starbucks. I think the combination of factors for Starbucks works very well in its favor. The reopening tailwind in China, operating profit margin expansion as revenue picks up, and the opportunity for store expansion. All three combined with a relatively inexpensive valuation favors Starbucks, in my opinion, right now. So if I had to pick one, I would pick Starbucks. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.